Gold. I will talk about gold only because today we'll have the non-farm payrolls as high impact event, average hourly earnings, also unemployment rate, also ISM services PMI. So high impact events from the United States, and the economic data will move the markets, will shake the markets, will bring sharp movements in both directions. Here on gold, risk disclaimer, and please read it, and here is support. It's very important, and yeah, very important. Gold crashed in the short term, and let's take a look. So here it's a gold 1 hour chart. It has crashed. Okay, it has extended its sell-off also yesterday after the BOE, ECB, and right now it challenges the lower medium line of the ascending pitchfork. Also this former low 1911. I've talked about this potential support yesterday during my live trading session webinar, and personally I've said yesterday that also I will look for longs in silver. Also probably I will wait for a potential new long for the price of gold to approach and reach maybe these former lows as downside obstacles and targets, and I will look for potential longs from around these levels. Okay, and right now let's take a look actually. So as I've said also yesterday during my live trading webinar, live trading session, non-farm employment change, okay, it is expected at the 193,000, below 223,000 in the previous reporting period. So unemployment rate also is expected to increase from 3.5% to 3.6%. Average hourly earnings are 0.3% growth, and very important ISM services PMI. This indicator is expected. It is expected at 50.5 in the, and could signal a potential expansion. Okay, and in my opinion, guys, better than expected US data. Okay, better than expected US data could lift the US dollar, and could force the price of gold to drop deeper, okay, to come back towards these former lows, right? But here we have strong demand zones. That's why personally I would like the price to hit the demand zones, to register only false breakdowns with great separation, to print maybe a pin bar, to develop a bullish pattern here. Also right now here Williams signals and indicates also a hidden divergence right now, maybe, yeah, and that's why right now technically gold could be oversold. Okay, could be oversold, and if the US data will come in better than expected, then the price could hit these levels. Or if the price of if the US data will if the US will report worse than expected data, okay, then probably and most likely the US dollar will depreciate, and then the price of gold could turn to the upside, and it could develop a new leg higher. So that's why I will keep an eye on gold here, because I want to catch potential rebounds, a new leg higher from around the demand zones. Okay, so thank you guys. This is my opinion right now before the non-farm payrolls, and I've said better than expected US data could force the price of gold to drop deeper, or better than worse than expected US data could help the price of gold to turn to the upside, to develop a new bullish momentum. Thank you guys. Risk disclaimer, please read it. It's important to understand that trading is risky. Past performance is not a reliable indicator of future performance. Support if you have questions, and don't forget that Learn to Trade team will never contact you directly, guys. The only way to communicate with Learn to Trade if you will send an email to support. Okay, and if you want to join the VIP groups, you'll have to purchase a subscription. Bye bye.